Hi, welcome to ACCQ Continuing Professional Education. This time we're going to talk about one of the most complex topics, accounting. This is called Consolidated Financial Statement. So ito yung dalawang company na nagjo-join together to form one unit, no? As there's a parent and there's a subsidiary. So we're going to talk about Consolidated Financial Statement, yung basics on how paano sila nagjo-join, no? And paano kino-consolidate yung mga accounts nila dito sa Consolidated Financial Statement at the date of acquisition. So we're going to talk about that after this. Sir, we're going to talk about Consolidated Financial Statement, particularly dito sa at the date of acquisition. So without much ado, let's begin. So before we move forward dun sa mga complex na matters later, we have to first identify or yung malaman itong yung definition of terms dito sa Consolidated Financial Statement. Number one is the parent. So a parent is an entity that controls one or more entities. So para bang ito yung Jollibee, tapos marami siyang mga subsidiary like for example, under Jollibee nandiyan yung Mang Inasal, yung Chowking, yan, saka yung Red Ribbon, yan. So isa yung pinaka-parent. And then yung subsidiary, ito naman yung mga nasasakupan niya, no? So, an entity that is controlled by another entity. So usually itong nagko-control na ito yung parent, no? Tapos yung subsidiary, ito yung parang pinaka-anak. And then the group, a parent and its subsidiary. So like we said a while ago, group of companies, for example, yung sa Jollibee, so marami siyang mga group of yung mga under Jollibee, no? Food Corporation, yung Mang Inasal, yung CK or Chowking. Marami rin mga companies, no? Like for example, even San Miguel Corporation. So marami silang kumbaga yung under San Miguel Corporation and even SM, no? SM Holding. So normally ito yung mga companies na may mga subsidiaries under its wing. And consolidated financial statement, the financial statement of a group in which assets, liabilities, equity, income, expenses, and cash flows of the parent and its subsidiaries are presented as those of a single economic unit. So mamaya, ipapakita natin yung consolidated financial statement and how this yung kanilang combined financial statement, no? Paano pinagsasama yan and paano yung mga ini-eliminate yung mga accounts, no? Katulad ng mga yung equity accounts ng subsidiary. So we're going to talk about that in a while. Preparation of consolidated financial statements. So a parent entity is required to present consolidated financial statement except when all of the following are met. The parent is a subsidiary of another entity and all its other owners do not object the parent not presenting consolidated financial statement. So in other words, itong parent company, meron ring nagmamay-ari sa kanya. So kumbaga it's also kumbaga a subsidiary of another company. At tapos, hindi naman, okay lang naman dun sa mga other owners na hindi na sila mag-present ng consolidated financial statement. A parent's debts or equity instruments are not traded in the public market or being processed for such purpose. So hindi siya, wala siya dun sa, hindi siya tinitrade dun sa local stock exchange, no? or sa PSC or sa yung Philippine Stock Exchange. And the parent's ultimate or any intermediate parent produces consolidated financial statements that are available for public use and comply with PFRS. Now, paano ba sasabi na ang consolidated financial statement o itong ano na to, masasabi natin merong parent at saka may subsidiary? Siyempre, ang parent, as we know, it is synonymous with control, no? Okay? Pag kami mga anak sila, no? Okay, so pag may anak yung parent, of course, siya yung may authority, so mas may control siya. So ano yung elements of control dito na pag yung dalawang company ay nagsanib, no? Nag-join together to form one unit, and then yung parent has the control over that subsidiary. Control exists if the investor has all of the following. So, number one is power over the investee. Meron siyang power dun sa investee. So, maaaring dun sa voting rights, no? Meron siyang kahit hindi kailangan na marami siyang shareholdings, no? Hindi kailangan over 50%. As long as he has yung bang significant rights dun sa gawain ng investee, mga galawan ng investee. So, meron siyang tinatawag na power. Exposure or rights to variable returns from its involvement with the investee. So, ito naman yung bang, as far as yung kinikita ng investee is concerned, meron siyang involvement. So, yung variable returns, no? Okay? The parent can practically name its yung bang kung magkano yung gusto niyang kitain over that over dun sa investee na yon o yung subsidiary. The ability to use its power over the investee to affect the amount of the investor's return. So I guess this is similar dun sa number 2, no? So meron siyang power, no? Okay, so yan, investment. So in other words, mas malawak yung kanyang participation doon, no? At saka meron siyang significant influence doon sa investee. To the point na he can name o the investor or yung ano na yon, yung parent, no, kung tawagin, has control doon sa operating activities nung investee. So a good example here is si Warren Buffett. If you have heard about Warren Buffett, is he's a number one investor sa buong mundo. Si world's number one investor. So bumibili siya ng mga companies, no? Tapos under siya dun sa under ito sa kanyang holding company, yung the name of that company is Berkshire Hathaway, no? So marami silang group of companies doon. I think he even has a share sa Coca-Cola and other yung mga famous brand names, no? And he has significant control dun sa mga businesses na yon. Power, how do a parent or one entity exercises power over another entity? An investor has power over an investee when the investor has existing rights that give it the current ability to direct investees' relevant activities. So practically speaking, meron siyang say doon sa mga galawan ng mga investee, no? Doon sa pati sa pagboboto, sa voting, no? Meron silang say doon, no? And even yung kung sino ilalagay nilang mga managers doon sa company ng investee, no? Kasi sa kanila na yun, meron silang power doon. So in other words, they can practically navigate, no, yung operations ng investee. And meron silang existing rights. How about relevant activities? When you talk about relevant activities, these are activities of the investee that significantly affect the investee's return. So meron siya significant influence, no? Kung magkano yung yung kikitain nila dun sa operations ng investee company. Maraming ganyan eh, maraming mga companies na gano'n, no? Na they have influence dun sa kikitain ng company. Good example yun nga si Jollibee and yung si Mang Inasal, no? So practically they have the control kung magkano yung kikitain nila doon, no? Okay, and yung operations ni Mang Inasal. Jollibee being the parent company. Elements of control, so these are the elements. So there is the power, no? And ability to affect returns, yung kikitain, no? And of course, yung variable, and of course, that translates to control. Okay, so those three practically, no? The power, the variable returns, and the ability to affect returns. So they have yung control. It translates to example dito using our Excel worksheet. So an illustration of a consolidated financial statement. So this is a step-by-step procedure, no, para hindi tayo maligaw. So consolidation at acquisition date. So we're going to take this time yung consolidation at acquisition date. So meron kasi yung dalawa eh. Merong at acquisition date, consolidation at acquisition date, and consolidation subsequent to acquisition date. So dito muna tayo sa at acquisition date. So ito yung pinaka-basic. So on January 1, 2021, JFC Company, which is the parent, acquires 80% interest in CK Incorporated, which is the subsidiary. The financial statements of the combining entities immediately after the business combination are shown below. So we have the parent and the subsidiary. So we have the cash, of course, for the parent and the subsidiary, 10,000, 5,000 respectively. And the accounts receivable, 30,000 for the parent and 12,000 for the subsidiary. Inventory, 40,000 for the parent and 23,000 for the subsidiary. And we have the investment in subsidiary for 75,000. Dito sa subsidiary, wala, no? So mamaya, makikita natin, i-eliminate natin yung pagka kinonsolidate na natin. Kasi yan, hiwalay pa yan. Pinapakita lang yung both sides of their financial position. And then yung equipment ni parent is 80,000 and yung kay subsidiary naman is 40,000. And then the total assets for parent of 335,000, for subsidiary 80,000. So as we see here, yung sa liabilities naman for accounts payable, so 50,000, and then yung kay subsidiary 6,000. So share capital under equity dito kay parent is 170,000, 50,000 for subsidiary. Share premium 65,000 for parent, and yung kay subsidiary wala. So yung retained earnings for parent, that's 50,000 and 24,000 for subsidiary. So we have a total liabilities and equity of 335,000 for the parent, and for subsidiary is 80,000. Now, additional information includes letter A, the subsidiaries' assets and liabilities are stated at their acquisition date, fair value. So kinakailangan naka-state yan sa fair values. Para bang sa partnership, no? If you're familiar with partnership accounting, bago magkaroon ng formation, naka-state dapat sa fair values yan, no? Kasi dun yung ito yung ginagamit na valuation at fair values. Now, of course, pagka merong adjustment, merong mga hindi at fair values, so ina-adjust natin yon. Okay, so as we see here, the subsidiaries' assets and liabilities are stated at their acquisition date, fair values except for the following. So yung inventory ni subsidiary is should be stated at 31,000. So kung makikita natin dito, yung subsidiary niya is 23,000. Okay, so mag-a-adjust tayo mamaya dyan. additional of 8,000. Okay, and then equipment of net at 48,000. So it is only 40,000 for subsidiary. So there's also an addition of 8,000. No? Okay, so we're going to also provide a journal entry for that. No? And then goodwill determined using PFRS number 3 is 3,000. So ilalagay natin to mag-recognize tayo ng goodwill. And then NCI or non-controlling interest in the net assets of the subsidiary also determined using PFRS 3 at 18,000. Okay, so itong non-controlling interest, ito yung makikita doon sa ito yung makikita doon sa equity. Okay, so ito yung normally ito yung mga minority stockholders. Okay, so requirement, prepare the consolidated statement of financial position. So we have here the solution, step by step to. So step number 1, eliminate natin yung investment in subsidiary account. So meron tayo kanina that is 75,000 dun sa asset portion. So we will eliminate that. Okay, kasi yung mga previous na investment doon sa subsidiary, tatanggalin natin yan. Kasi panibago to. Okay, so and measure the subsidiaries' assets and liabilities at their date fair values. Okay, so that's what we'll do. And then recognize the goodwill, and then which is the 3,000, and recognize the subsidiaries pre-combination equity accounts with the NCI. So yung nakita natin kanina na 18,000. So we will also provide that dun sa equity portion naman. Okay, and then step 2, add line by line similar items of assets and liabilities of the combining constituents. So pag-i-add na natin sila pagka gumawa na tayo ng consolidated. So we have here, okay, so yung sa parent, so merong 10,000 as we saw a while ago, si parent and subsidiary. So that's combined or consolidated of 15,000. That's 10,000 plus 5,000. Okay, so and then doon naman sa dito sa accounts receivable, that's 30,000 and 12,000, so that's 42. Yung consolidated nila. Inventory, as we saw a while ago, may adjustment siya, So yung kay subsidiary, ang sabi dito, inventory, as we saw a while ago, inventory should be valued at 31,000. So we're going to place here 31,000, Okay, para maging of course 71,000. 71,000 na. So plus 8 kasi yun, From 23 plus 8, so maging 31. And of course, investment in subsidiary, ang sabi dyan, doon sa step 1 is tatanggalin natin. So tinanggal na natin, so wala na yung account na investment in subsidiary dun sa consolidated. And then after which, yung equipment natin, which is 180,000, okay, and then yung para kay parent, of course, yung kay subsidiary, kailangan fair values yan, which is stated at 48,000. So lalagay natin dyan 48,000. So this would be 228 yung consolidated nila. And then, meron pa ba? Finally, may goodwill. Okay, so goodwill, dito, maglalagay tayo dito. Okay, so for 3,000. Now, goodwill arising from yung transaction na to, yung sa purchase at the date of acquisition. Hindi yung goodwill dati, So dito tayo normally nagkakaroon ng goodwill pagka yung purchase price ni parent sumobra kaysa dun sa identifiable fair value yung assets ni subsidiary. Okay, mas malaki yung kanyang binigay, ika nga. Okay, so that would be 3,000. So this is 300. So 15 plus 42 plus 71 plus 228 plus this one. Okay, so hatake natin to ng konti para maging 71. Yan. 359,000 para maging 359,000. Okay, so medyo konting ano lang, adjustment lang yan. Yan. Okay, now let's proceed now to the next. So yung accounts payable ni subsidiary is 50,000 and kay parent is 50,000 and yung kay subsidiary is 6,000 for a total of 56,000. And then yung share capital ni parent is 170,000 versus 50. So tatanggalin natin to kasi binili na yung stocks, yung ano niya, yung shares niya ni subsidiary, no? Okay, so eliminate natin 'yan. Na mapapansin mo kahit na 80% lang yung pagkakabili pero yung amount na nilalagay natin is 100%, no? Katulad nito sa assets, no? Okay, so hindi na natin siya pinoproportion or minumultiply ng 80%, no? Itong mga amounts na to sa subsidiary. So diretso na to as if 100%. Okay, so that is 56,000. And then yung itong share capital, so 170,000. Ayan. Now the share premium, so we have here 65,000. So extend lang yung amount dyan. Okay, wala naman yung kay subsidiary. And then the retained earnings for parent is 50,000. So tatanggalin natin yung retained earnings ni subsidiary kasi nabili na siya. So 50,000. Usually mga equity section, yun yung tinatanggal kay subsidiary. Okay, and then we have yung non-controlling interest. No? Ito yung parang mga minority interest. No? So this is for 18,000. Okay, so that would be, first ano natin to. Okay, so that would be for 18,000. Yeah. Now, as we can see here, first, hindi raw siya na-consider pa nung una, so i-consider na natin siya ngayon. Yan. So that's about 359,000. Yan. Now, note, 100% of the assets and liabilities, as we said a while ago, of the subsidiary are included in the consolidated financial statement. Even though the parent holds only 80%. This is an application of the following concepts, no? Substance over form. Kasi siya na yung may-ari, yung ability niya to control, as we have talked about a while ago. So the consolidated financial statement report the parent's ability to control the whole of the subsidiary. So substance over form ang sinusunod natin doon. And not just only up to the extent of the legal percentage acquired. So hindi na, regardless of the legal percentage acquired, yung valuation natin is 100% because of yung ability to control yung subsidiary. And also the entity theory. The parent and subsidiary is viewed as a single unit. Okay? The subsidiaries pre-combination equity accounts such as yung share capital and retained earnings are eliminated in full and replaced with the non-controlling interest. So ito yung ginawa natin dito. Kaya itong 18,000 na yan. Okay, so we provided that yung non-controlling kasi tinanggal na yung mga equity accounts niya. Okay, so the share capital, share premium, and retained earnings accounts in the consolidated financial statements pertain to the owners. So para lang dun sa mga owners yon, no, of the parent. Okay, kasi sila na yung nakabili. So while the non-controlling interest accounts pertain to the other owners of the subsidiary. Ito yung parang minority interest doon sa subsidiary. doon sa iba pang may-ari doon sa subsidiary. Okay, so the equity structure appearing in the consolidated financial statements reflects that of a legal entity. The group is not a legal entity, although each member of the group is a separate legal entity. So thus, the consolidated financial statement reflects the equity structure of the legal parent. So the equity of other members of the group is presented in a single line item described as non-controlling interest. Ito yun, 18,000 yan. Okay, so those are the non-controlling interest. Sila yung mga iba pa mga stockholders doon sa subsidiary na maliliit na lang yung shares nila. Okay, so marami mga ganito actually mga companies dito sa Philippines, no? Mostly owned by the oligarchs, no? Like yung sa PLDT, no? Sa of course sa mga malalaking company like San Miguel, yung mga big companies, RFM. Okay, now we can now proceed dito sa sa consolidated financial statement of makakagawa na tayo dito ng consolidated financial statement ng JFC Group of Companies. So kasama na dito si CK Incorporated. So this is consolidated statement of financial position as of January 1, 2021, the date of acquisition. So we have yung cash 15,000, no? So nakuha lang natin dito yun 15,000. Okay, tapos yung 42,000 for accounts receivable, inventory of 71,000, that's already combined, no? Adjusted na yan. And then equipment for 228,000, that's familiar, nakita natin kung paano nakuha yung equipment, no? Okay, yung addition na 8,000 doon sa equipment ni subsidiary, so for a total of 228,000 for that equipment. And then yung goodwill. So pareho yung total assets niya at 359,000 dito sa combined, consolidated. Yan. Okay, and then of course dun sa liabilities and equity, so we have accounts payable of 56,000. Okay? And then yung share premium, so meron tayong 285. Okay, puro na to, combined na to, no? Actually kay na to, kay parent na to lahat, no? Yung equity portion na yan, yung 170, 65 and 50, no? Okay, so and then of course yung 18,000 na non-controlling interest. So nandun rin siya sa equity pero nakahiwalay siya. Okay, so that is total of 303,000 yung total equity. No? Total liabilities and equity of the consolidated financial statement is also the same as the assets, which is 359,000. Now, let's take up yung journal entries, no? Kasi kanina no, meron tayong mga adjustment regarding dun sa pag-increase ng mga value nung assets, no, ni subsidiary. So first is yung January 1, 2021, yung inventory, increase in inventory, that's for 8,000. So we debit that, no? Okay, and then yung equipment also increased from 40,000 to 48,000. So that's another. So i-debit natin, no, para ma-reflect yon doon sa consolidated financial statement. Doon sa worksheet ng consolidated financial statement, which we will take up in a little while. So that is also for 8,000. So in debit. And then yung share capital of CK, so inano na natin yon, ineliminate natin yon, tinatanggal natin yung mga equity portion ni subsidiary kasi nabili na nga siya. Okay, by debiting it. Diba ang normal balance ng equity is credit, so pagka tinatanggal natin or binabawasan, dinedebit natin yung kabaliktaran, no? Okay, and then yung retained earnings ni doon, no, for the actually this is not this is CK. Okay, not yan. Titignan ko lang kung nahalata mo yan. Yan. Okay, so that is for 24,000. No? So tinatanggal natin yung mga equity ni subsidiary. And of course, we also recognize a goodwill on that acquisition, a transaction, no, for 3,000. So there is an investment in subsidiary of 75,000. Yan. Okay, so tinanggal rin natin dun sa part naman ni parent, no? Kung naalala mo pa, itong 75,000 na yan, naandito yan, no? Okay, yung 75,000 na yan. So na yun, magpakita ka 75,000. Tinanggal natin yan dun sa okay, wala na siyang wala na tayong investment in subsidiary. Pero dun sa pinakaunang ito siya. There. Okay, yung 75,000 na yan. So tinatanggal na natin yan, yung mga pre-acquisition investment kay subsidiary, tinatanggal natin yan. So that is for 75,000. By crediting it, kasi yung balance sa kanina debit, kasi nandun siya sa assets, no? So credit natin para ma-write off na yan. Okay, so that would be for yun, credit natin for 75,000. Yun there. Now, yung non-controlling interest, of course, that is also part of the equity, no? Okay, parang nakaseparate yung line item niya, but it is also part of the equity. Okay, of the consolidated financial statement. Ito yung non-controlling interest for 18,000, so naka-credit siya. And then ilalagay natin dito yung mga ginawa nating adjusting entries dito sa taas, itong mga journal entries na to, no? Okay, so ito yung worksheet na to. Now, hindi naman to requirement, no, pag gumagawa ng consolidated financial statement. Okay, so consolidated journal entries are not recorded in either of the parents or the subsidiaries books of account. These are prepared only for the purpose of preparing the consolidated financial statement. So ginawa lang itong journal entries na to para to facilitate itong consolidated financial statement. Now, consolidated worksheet are also prepared for the same purpose rather than for formal reports, no? Para lang ma-facilitate. So as we see here a while ago, no? Okay, ito yung original na amounts kanina. 335,000 for JFC, and for CK it's 80,000. No? Okay, tapos nagkaroon tayo ng diyan ng dito sa ng adjustment diyan dito sa accounts receivable, sa inventory for 8,000. Ayun. So lalagay natin siya diyan. Okay, yan. So additional, so naging 71,000 na. And then after that, itong investment in subsidiary, tatanggalin natin siya by crediting it kasi naka-debit siya, no? Because it's part of the asset. So pag credit, babawasan yung asset, no? So tinananggal natin siya ng totally, no? So for 75%, so nawala na siya, zero na. Okay? And then after which, no, ito naman nagdagdag tayo ng 8,000 dun sa equipment ni subsidiary. So there, ayan, so there's an addition because there's a debit, no? Okay, so that's for 8,000. And then finally, itong goodwill na to, which is also a part of the asset, no? So ni-recognize natin, no, for 3,000. Okay, so lahat ng mga dinebits natin, lagay natin sa debit side, yung credits nilagay natin dito sa credit side. Okay, so as we see here, no? Okay, so this would be, hindi pa natin kasi na-consider kanina yung goodwill, no? Kaya yan na natin. Extend natin yan. So this is 359,000. Okay, now, dito naman sa liability, wala naman dito nagalaw, no? So let's just leave it blank, no? Itong consolidate, itong debit credit, no? Okay, so dito tayo sa share capital. Now, share capital, tatanggalin natin yung share capital ni subsidiary, no? So naka-debit siya dito. Okay? So for 50,000, so nabawasan na siya, no? Okay? So from 220 to 170,000. And then yung ano pa yung tatanggalin natin? Yung retained earnings ni subsidiary kasi dinebit rin natin dito. Okay, yun, 24,000. No? So, ayan. So, nabawasan siya from 74 to 50,000 na lang. No? Okay. Other than that, ano pa yung kailangan natin ni i-recognize natin ngayon yung NCI or non-controlling interest, no? Okay, ni subsidiary. Okay, so there's a credit there, no? Yun, naka-credit siya for 18,000. So there. So as we can see here, no? Okay, so there's a total of 303,000. Okay, dun sa consolidated, no? And yung ano niya, yung for the liabilities and equity, there's also a total of 359,000. So there you have it, no? Okay, the consolidated financial statement of the constituent company, JFC and CK Incorporated. Okay, so so if you have any questions with regard to the preceding lesson, so you may write down your comments. Of course, subscribe, share this video, of course, like. So if you have any topics or any topics that you have in mind, or if you want na gusto magpa-shoutout, no, pwede rin, no? Okay, so just write down your comments there, no? Okay, so for now, God bless and stay safe.